back, still watching Market Cafe on ET Now. Now we have a handful of private banks on our radar this earnings season, the likes of ICICI Bank, IndusInd Bank and Bandhan Bank. Gaurav is here with a roundup of how all of these banks have performed and what the numbers and the earnings fine print look like. Good morning, Gaurav. Take it away.
Well, yes. First, let's begin with ICICI Bank because we have got a good set of numbers from this bank. If we look at the numbers, those were actually higher than what the street was expecting in terms of PPOP and PAT. And when we talk about net interest margin, we saw that contracting almost by 4 basis points, but again in line with what the street was expecting. Apart from that, when we talk about advances and deposits, there also we saw a decent growth. Advances grew almost by 16%, while deposits grew almost by 15% on a YY basis. When we talk about asset quality, there also we did not see any kind of risk in this bank in this quarter. Credit costs remain healthy at around 50 basis points, which is again at the street's expectation. And on back of this, we saw brokerages also being a little bullish on this bank. They have maintained their target price and as well as their stance on the bank, whereas we also saw InCred actually increasing the target price to 1450 rupees for ICICI Bank. Next, let's talk about IndusInd Bank because there we saw some kind of decent set of numbers, but when we look at the numbers, PPOP and PAT was actually below what the street was expecting. When we talk about loan growth, that came at 16%. Again, that was a little disappointing because bank has given a growth target of around 18 to 20% for loan book for the year. And apart from that, when we talk about asset quality, there we saw bank did not utilize any kind of contingent buffer, which was an issue with IndusInd Bank. But other than that, asset quality did not see any kind of positive surprise. It was again in line with what the street was expecting. And on back of this, we saw some brokerages cutting the target price for IndusInd Bank like IIFL, Nuvama. Even Jefferies went ahead and cut the target price for IndusInd Bank. Lastly, let's also watch out for Bandhan Bank because there also we saw decent set of numbers. Bank actually grew higher than what the street was expecting despite having Q1 as a weak quarter for the bank. When we talk about asset quality, there was a positive surprise from the bank because asset quality actually improved for Bandhan Bank in this quarter. We saw credit cost going down to 1.6% versus what it was at 2.4% on a year-on-year basis. There was a hiccup in this Bandhan Bank result, and that was basically a revision in the risk weights of EEB, which is one of the books of the Bandhan Bank. And because of this, we saw a compression of capital adequacy ratio almost by 360 basis points. But apart from that, when we talk about brokerages, they have actually maintained their stance. We have seen CLSA actually hiking the target price to 240 rupees for the bank. So definitely watching out on all these private banks on the back of decent set of numbers that have reported in this Q1.
Thanks, Gaurav, for that update coming in.
If you like this video, then like, share and subscribe to ET Now.